19.56% annualized return in the first quarter of 2025. That is a 4.89% net quarterly returns. What does this mean? It means if you invested 1 million Kenya shillings in Mansa X at the beginning of this year 2025, you received 48,900 in your account at the end of the first 3 months of the year. Interesting, right? So today I want us to talk about Mansa X. This will be a comprehensive video to just accommodate even those who are new to this fund, those who have not invested yet, and for those who have invested. Please watch the video to the end and engage in the comment section. Tell us your experience with this particular fund, this Mansa X. Also, confirm that this is actually what you received from this particular fund. I know the first quarter of 2025 had a lot going on, including the tariffs by the US President Donald Trump. And I remember I was watching a video around that particular time, and it was clear that Mansa X investors were worried and they thought that the rates would go down. But I hope that now you feel some sort of relief and you're excited, correct? I remember in one of the videos that we did previously, we mentioned that they do active trading and leverage trading, meaning they can make money when the markets are going up and when the markets are going down, yes? And in short, this means that they thrive in a volatile market, which is the reason why they did well amidst the volatility in the first quarter of 2025. For those who have invested, kindly tell us, how does this make you feel? How do you feel about this kind of returns, and whether you think they will be able to keep this up even in the second quarter of the year? As you share that, let's discuss what Mansa X is, who owns the fund, and some of the features such as fees, capital preservation, minimum investment, and risk involved in investing in this particular fund. And guys, I have had your request, and I'm going to make this video as short as I can while still delivering the main message or everything that you need to know about Mansa X. So I'll keep it maximum 15 minutes, yes? And also, please subscribe if you have not subscribed yet, so that you don't miss out on the investment opportunities, reviews, and also investment tips. So let's do this. Mansa X is a special fund, and a special fund is a collective investment scheme, meaning that it is managed by professionals who collect money from different people and invest in different assets. These different assets can range from things like commodities, precious metals, stocks, technologies. They also do active trading and leverage trading. For Mansa X, these are some of the places or things that they invest in. Take a look. And based on this, they allocate different amounts to these different asset classes. And as you can see here, these are their top 10 holdings for the quarter one of 2025. You can take a look and see how they diversify the money that they collect from the investors, yes? Now, the next thing that you're going to look at is who regulates Mansa X. So, Mansa X is regulated by Capital Market Authority, and they make sure that Mansa X operates within the law or within the rules, yes? And according to the regulations, this fund must have a custodian who basically holds the money for the investors, and then they also have someone we call, or an entity or an institution we call a trustee. A trustee ensures that the fund manager is operating within the set guidelines or the set regulations, yes? And the custodian for Mansa X is I&M Bank, and the owner of the fund, that is the fund manager, is Standard Investment Bank. Mansa X has been in operation for 6 years, and 2025 is actually their 7th year. And here is how they have performed over the years. These are annualized returns, and you can see we have both the gross returns and the net returns, meaning the net returns, they have already deducted the management fee, yes? Now, let us look at the risk profile of Mansa X, and this is actually available in the fund fact sheet. You can always check that out. So the fund is rated at 2 in the spectrum of investment, meaning it is considered as a low to medium risk investment. And I want you to understand, the assets that this fund invests in nature, they are risky investments, but this fund is well diversified to mitigate the risk. And it's through diversification that this fund is able to preserve your capital or to protect your capital. So Mansa X aims to preserve your capital. And I would like to emphasize this. They do not guarantee capital preservation, but they aim to preserve your capital through diversification. And as long as the team behind the fund is good, they will make profit for you. They are going to make you money, and you're going to earn good returns with your money. And I want to say that again. So long as the team behind the fund is good, they are able to identify good opportunities and allocate the assets in the right way. These guys, they are going to give you good returns for your money, yes? So long as they are doing their job and they are identifying opportunities, or their foresight is good and they are able to see opportunities even in the volatile market, they will be able to give you good returns. And I know the next question many of us will ask is, does this mean that this fund does not have any risk? Or maybe, does this mean that I cannot lose my capital in this particular fund? And the truth is, you can actually lose your capital in this particular fund. And these are situations that are very rare, but it can happen. And I would like you to keep this in mind. This does not mean that you should not invest in this particular fund. This does not mean that I'm saying this for you to shy away from investing in this particular fund, but I'm saying this so that you are aware that there are some circumstances that you can lose the money you have invested in this particular fund. But the fact remains that the fund managers are here because of business. They want to make money, and they want to make sure you as an investor, you're getting your returns. But sometimes not everything is controlled, or you cannot control everything. And there are some extreme scenarios where you could actually lose money in this particular. That's why we don't say that they guarantee capital preservation. We say they aim to preserve your capital. And I'll give an example of such a scenario. For example, if the fund manager went out of business, in this case, the Standard Investment Bank went out of business. And remember, we have said that the success of this particular fund, or how much you're going to be making in this particular fund, is dependent on how good the fund managers are, how good they are at trading, how good they are at analyzing the markets, how good they are at putting your money in the right places at the right time. So if something happened to the fund manager, or if the fund manager went out of business, it would mean either the CMA would find another fund manager to manage this particular fund, and it would mean that they have to find a fund manager who is as good as now Standard Investment Bank in terms of managing such a fund. And if that is not possible, it would mean that they liquidate the assets. And remember, we said that the underlying assets are risky investments, meaning if we liquidate these assets in the wrong time, the investors could lose their capital or a portion of their capital. True? And this is where I encourage you, make sure that you're doing diversification at a personal level. Don't take everything that you have and invest in such a fund, because no one knows what will happen tomorrow. No one knows what will happen to the markets. No one knows. So make sure that you're also diversifying your investments to protect yourself or mitigate the risk, as the Mansa X team has done, all right? And if you want to learn more about the risk involved in investing in special funds, make sure that you watch a video that we did a complete video on this. I will leave the link in the description box, and you can also click here to watch the full video. And onto that, I would like to add this comment because it was a great addition to the discussion, and it actually highlights how Mansa X has performed in the midst of volatility. Wairimo, thank you so much for this addition. And she says, point to note, even in the midst of the global recession, pandemic and or war, the industrial complex of each of these events will be making money, maybe even more. The loss would happen if the investor is incompetent and or has a moral backbone. Don't you agree? And I totally agree with her, because even in such scenarios, remember that this would mean that the markets will be very volatile, and we have already said that Mansa X or special funds, they make money when the markets are going up and when the markets are going down. Basically, they thrive in volatility, meaning that they are going to be making money in such a scenario because they will take advantage of this volatility. Again, in such scenarios, there are sectors that will be making money. For example, in the healthcare sector, in case of a pandemic, in the healthcare sector, it does well, yes? So these are scenarios where you can see, so long as the fund manager know what they are doing and they're good at their job, it means that you, as an investor, you'll still be making money, yes? Thank you, Orimo, for that addition to our discussion. I believe right now we know the risk involved in investing in Mansa X, and now that that is out of the way, let us look at the requirements or what you need to start investing in Mansa X and the fees involved in Mansa X, yes? And this fund has two accounts, a USD account and a Kenya shillings account. And the Kenya shillings account was launched in January 2019, and the USD account was launched in October 2022. The asset under management for the Kenya shillings account is 47.29 billion Kenya shillings, and the asset under management for the USD account is 63.45 million dollars, yes, USD dollars. Now let us look at the fees, and it's good to know that you're not charged to redeem your money in this particular investment, yes? And then they have a financial service charge of 5%, prorated, and prorated basically means that it's adjusted. And I'll give an example so that you can understand this. So for example here, 5% is per year, but this is adjusted to fit the period of time you are in this particular fund. For example, if you join the fund and leave before the year ends, you won't pay the 5%, but it will be prorated or adjusted to fit the period you have been in this market, yes? So if it's prorated daily, it means the fees is calculated based on the exact number of days you were or you have been in this particular fund. So in short, it means it is calculated each day rather than yearly or monthly. And in this case, the daily rate will be now 5% divided by 365 days, so approximately 0.0137%. So the next charge or fees is the performance charges, which is 10% above handle rate, and the handle rate is 25%. What this means is if the fund achieves a rate that is above 25%, they charge 10% performance charge. Okay, so basically those are the fees that you pay when you're investing in this particular fund. And that being said, I would like to conclude this video with a screenshot of where they have invested the investors' money in terms of the geographical distribution of the assets. So you can take a look at these and see where they have invested a lot, and from there you'll be able to be following how the fund is performing. Thank you for staying with me, and if you're interested with other special funds here in Kenya, you can consider watching a video I did on Oak Special Fund as well as a video I did on Avocap Special Funds. I'm going to leave the one for Avocap Special Fund here, so consider watching it and see if it's an investment that you would be willing to take, and let's engage in the comment section. See you in our next video, and bye. Happy investing.